Hi, I'm Francesca Cornelli, the director of the Coller Institute of Private Equity.
Hi, this is Florin, Vasvari, a fellow of the Coller Institute of Private Equity and associate professor at London Business School.
We are here to talk about this seventh year symposium, which again brought a lot of update on how the private equity is doing. And it starts with a very interesting keynote speech at the beginning by Steve Kaplan, who is a professor at Chicago. And he was presenting the results of a survey where he asked private equity professionals in the US how they value a company, what they look in a company when they invest, how to exit, and it really showed what private equity people say they do. And to a certain extent, what was interesting was that they all are trying to focus much more of operational improvement. And as Stephen was saying, some years ago they would not have focused
on operational improvements.
No.
I also found his research very interesting, in particular the research he discussed in the last panel discussion, where he was mentioning that the persistence in returns of the private equity funds is actually decreasing, has been decreasing over time. So he's been showing some results where the persistence of the funds raised after 2000 relative to the persistence of performance of the funds raised before 2000 is significantly lower. He didn't find that result actually for the venture capital funds. So he still is finding a significant persistence in performance for venture funds, but not for private equity funds. And I think that discussion in the panel was very interesting. People are trying to understand why this persistence has been changing. And I think one of the arguments that were thrown at the table was that the ever larger funds, the private equity funds that are raised, are not able to find enough deals. And as a result, their returns are affected negatively.
And that, in a way, was also consistent with a speech by Michael Jacobides and Michael Drexel, which was a report on the World Economic Forum, studies that were really showing how the private equity is evolving, in general, the alternative investment world, and showing again, less persistence, more difficulties, more movement towards direct investment, co-investments. But at the same time, I thought that was interesting, is this because of the low yields environment, pension funds chasing high returns and therefore investing a lot in private equity.
Yes.
I don't know what you think, but I thought what was interesting comparing this year with last year, this year everybody's talking about a lot of capital is going to private equity.
An oversupply of capital.
Yes.
And that basically, if 18 months ago, it was a kind of a suppliers of capital market, today is a buyers of capital market, if you want. So the GPs have quite a bit of say, especially the very good ones that are oversubscribed. And some panelists were giving examples of funds that had the first close and the closing on the same day, which was, quite interesting, quite an interesting anecdote to hear that a fund can be raised in one day. But other people that were involved in discussions were mentioning that their funds were oversubscribed by 50%.
Yes, others said they had a cap. And that is very interesting because last year it was more about difficulties in fundraising. And now it's more, actually some people were saying that they were worried in a sense that all this capital, because we know that the evidence is the vintage years in which too much money is raised usually don't forecast necessarily better returns.
And the expectation is that more capital will be coming to the market, because a lot of the funds that were raised in 2006 and 2007 are yet to exit those investments. And those balance sheets look very good. They expect very good returns. And the question was, what will happen when the LPs get all these capital distributions? Will they reinvest in private equity? There was a very interesting discussion also about the banking sector and how the banks fund the private equity deals these days. A return to the covenant light loans maybe the early signs of another bubble.
And in a way, the excess of capital married well with our second panel that was talking about private equity diversifying in other industries, because when you have all this capital, how you enter into other, you use it to enter also in other industries. And I thought we had as a keynote speaker Johannes Huth, and I thought it was very insightful in a lot of dimensions. But I thought it was very interesting when I asked him, why is private equity entering into these areas? He says, well, on one side is Salesforce, so we have this machine to raise money and therefore is efficient to other things. But also is this unique investment in understanding a business. And once you understand the business, then it's actually optimal to invest on the real estate side, on the
both the equity
debt,
side
on
and the debt side.
Debt. And it's just, and again, so if we want to reflect on what private equity can bring to the table, is this deep understanding of a business, of how to turn it around, how to help it, what is a good business, what is not a good business.
And this trend is also held by the LPs, especially the very large LPs, preference for fewer relations with fewer GPs. And the consolidation of these relationships is basically driving the emergence of all these new products that are provided by the private equity firms. Like private debt, for instance, is one of those products that has been taking off over the last 2 years.
Yeah, that's true. And they were discussing exactly the fact that the banks are not lending enough. And again, Johannes touched on this. The banks are not lending enough, and therefore they thought there's a niche in the market we're offering for companies which are starved for money.
Exactly. There's a good return. There's basically a very good trade-off between returns and risks.
Yes.
And certainly these private equity firms have a deep understanding of the company's fundamentals, and they're probably better able now, given this access to information, to assess the credit riskiness of a debt security.
Absolutely. And another aspect I thought was interesting in Johannes Huth's interviews was about, for example, sustainability. How he believes, it's very important for private equity and how it can help for value creation, because it's a way to attract the right people. That is, if you do run your business in a proper corporate social responsible way, with a sustainability way, you will attract a different quality of people than if you don't, and that will help you for value creation. And I know sustainability is a buzzword for private equity now, but he made the case of, this is
there's no window dressing.
Absolutely.
There is certainly a demand from LPs. Ultimately, it's good business, right, for the private equity firms that decide to look at, social and sustainability and responsibility type investment strategies and follow, certain code of ethics. Ultimately, this is where probably an exit is easier. Yes,
it's true. And then we had one more panel on the innovation, and there was a lot of debate, and that was very interesting because the issue is venture capital and private equity very important for driving innovation?
Is it a catalyst for
Is it a catalyst for innovation enhancing? And of course there were one person investing in growth capital, another in venture capital, arguing for their importance, but then there were other two panelists arguing how the importance also of government funding. And I believe it's very true, right? I mean, we have to look at both, in the sense on one side the government usually misses the commercialization, the last aspect, but we shouldn't forget the fact that very often venture capital come in after years of very basic research, university research, that and they can do the last stage. It's still very risky, but it's very important to remember.
I mean, I think it was a very interesting and heated discussion, actually.
Yes.
You could see that the panelists had very strong views. But at the end of the day, I think what I got out of it is that there is no consensus on how the government should allocate money for basic research. some proposals were that maybe the government should allocate money to VC funds or have these public-private type partnerships. But some panelists were skeptical of that approach.
Yes. I agree with you. I thought that was really compelling, the fact that we still do not know how to push for innovation in a country.
Yeah.
We know innovation is very important for the growth of the country, but how do we push it? Is it by favoring the VC, or is it more by investing in the basic research before? Yeah. We are still trying to understand.
Especially that the incubation period is very long and the outcome is very uncertain. That's why, if you remember the panel discussion, people even argued about whether the government is wasting money or not. On one hand, people thought that the government is an inefficient allocator of funds for research, but on the other hand, people are arguing that, well, at the end of the day, we know what doesn't work. And if that costs money, so be it.
Yes, absolutely.
But at the end of the day, I think maybe a hybrid type model, or one example that was also mentioned was that, for instance, the government could be funding a fund, but have their return capped, which I thought that was, quite interesting. But one thing that probably was missing from that discussion, because a lot of numbers were thrown that the government has been investing a lot of billions, especially in the US, a lot of billions of dollars, is that the basic research is also funded with a lot of private money, not just government money. There are lots of high net worth individuals and corporations that donate. I go around campuses in the United States and I see a lot of new buildings that are funded by individuals.
That's true. We shouldn't underestimate that. But I would say, if I had to think of it, what was different about this symposium is really the sense of definitely, the concerns about the private equity future and the fundraising, and they can do it.
There is a sense of optimism on the GP side, but also people maybe are a bit worried about early warning signs that maybe we are back to 2006, 2007. Right. High valuations, easy financing, a lot of capital coming to private equity. Who will tell what will happen?
It looks like we are definitely entering a different phase of the cycle, and then depending, you can see the more worrying part of the cycle, or which is exactly what you were saying, or the most optimistic, like, okay, we're raising the money, we can generate innovation and so on. But definitely exciting times, I think.
But certainly, overall, a very interesting conference. Lots of things debated and a lot to learn.
Yes, so hopefully we'll continue like that in the future.